Friends, in this video for I Thought Wealth, I am going to talk to you on the topic, what is the market staring at? The markets are fearing rising inflation. We clearly know that liquidity is going to be a problem. We know companies are gradually slowing in their growth. Profit margins are coming down, and we could well see a new set of companies doing well in the new economic reality. When the economic context changes, some companies which did well earlier stop doing as well, and some other companies which didn't do that well earlier start doing very well. This usually creates an economic reset. It creates a realignment in the stock market leadership, and it puts in place a new valuation paradigm. If people believed that only one set of companies must be very highly valued in one market context, when that context changes and when it is obvious that it's not going to go back to where it was earlier, the markets gradually change their valuation view on the companies which led the earlier bull run. This doesn't happen overnight. It will take quite a lot of time because valuation expectations are largely a habit. If you are used to high valuations, whenever valuations fall, you expect the valuations to climb back. Only when you realize that the valuations are not going to go back to where they were earlier and you accept that, then you go on to set a new valuation paradigm, or you accept a newer level for that industry which you earlier gave more recognition to. This is a slow process, it's a slow grind. When you reduce the valuation of one set of companies, you also want to find another set of companies where you can deploy more capital, where you find prospects are more promising, where you find predictability rising. When you find those companies and everybody gravitates slowly towards them, those valuations start inching up. And when more people seek to invest in those companies, those valuations reach more realistic and higher levels. Convergence is achieved between companies losing valuation and companies gaining valuation. Market leadership at that stage starts to change and new companies become market favorites. We will gradually move towards that phase in the coming quarters. This quarter will set the tone, and the results for the period ending June 30th are going to make the markets sit up, rethink, take notice and readjust expectations across and find where they can focus and find the new leaders of the future. It could be companies which earlier led the bull runs, which were market favorites earlier, but the markets will take time to accept and grow out of their recent biases. So the quarter ends in a few days and the results will start flowing a week or two later. In this interim period, the markets will see some bit of uncertainty. We will see habitual buying of the old favorites, and only after the results begin to flow and comparisons and benchmarks are made, we will start the process of a rethink. This in essence is what I think the market is heading towards. Thank you for watching this video.